So once you know the fundamentals, you kind of need to know how they look like in action too. Because it's one thing to know the fundamentals in general, and it's another thing to know the fundamentals specifically. And I mean the specific fundamentals that move the trend, that drive the sentiment, that create the good trade opportunities. Now, let me show you what those fundamentals are, because I'm gonna tell you the things that you may read and watch and hear out there, they're not exactly the way you should be looking at fundamentals. So let me explain what I mean. So first of all, let's start with context. Context in fundamental analysis is the keyword. And I don't want to bore you a lot with technical and useless definitions about fundamentals. No, so let's keep it way more practical and let's use real trade examples for the discussion, okay? So this is a trade that we sent in our public Telegram channel, and you can find a link about that in the description below. Now, notice that phrase, fundamentally we expect the chop to resolve to the downside. Now what does that mean? How can you expect something to move in a certain direction fundamentally? Well, let me show you. Bear with me for a second, because this is the part that gets a little bit technical, but it's going to make sense later into the video. So, the context around this trade was that inflation in the UK was not moving lower fast enough, while inflation in Europe was moving lower pretty well. Now, if you know something about fundamentals, you will know that that links to the central banks. That links to the Bank of England needing to hike more and to the European Central Bank needing to hike less. Okay? Now, that was the sentiment that was growing in that pair and that was making it trend gradually lower. So if you're following so far, great. So let's make it even more practical. The trade in that example was clear. We quickly went bearish on the pair, expecting that story to continue, expecting that divergence between inflation in the UK and inflation in Europe. And as a result, that divergence between the Bank of England and the European Central Bank to continue. That story unfolded pretty nicely. Inflation in Europe kept printing soft. Inflation in the UK kept printing a little bit too resilient. And so that story kept gaining ground. And as a result, the pair kept moving lower. So that story brought the pair to target. Now, why is this example important? Because this is exactly fundamental analysis. Let me explain. Think about what the whole thing revolves around. What is it? It's about market sentiment, right? It's about narrative. It's about whatever the dominant story is in the markets at any given moment in time. And I mean, at any moment, if the market is trending, there is always a story and a sentiment driving that trend. And understanding that narrative, understanding that story, that's what fundamental analysis is really about. Now, listen very closely to what I'm about to say, because this is the essence of fundamentals. The essence of how you can really use fundamentals to benefit your trading. Basically, at any moment in time, when you know and understand the fundamental driver moving the market, you can ask yourself, should this fundamental sentiment continue, or is it now exhausting? Now that's not a genius question, of course. It's a pretty simple question. But the answer to that question is what gives you the perfect context to trade in the right direction, because the answer to the question tells you whether you should expect the trend to continue or whether you should expect a reversal or a counter trend pullback, whatever. But basically, with that answer, you know whether the market is likely to keep moving in a certain direction or not. Now let me say that again for a second. When you know and understand the fundamental driver moving the market, you can ask yourself, should this fundamental sentiment continue, or is it near exhausting? Is it near topping? That's a simple question. Yes. The answer to the question literally tells you whether the market should keep moving in a certain direction or not. And that makes your trading a lot easier, because then you can know if you should follow the trend maybe you should start fading it. Now, let me give you a bit more context to make the point even clearer. Let's take a hypothetical example where the Fed is keeping interest rates very low while also undergoing a large QE program. Now, if you know something about fundamentals, that example is gonna flash right in front of your eyes as bearish for the dollar. And it is. That context would be very bearish for the dollar. And in this hypothetical example, that's the fundamental sentiment, and the dollar is turning bearish. So now you know the fundamental story, now you know the context. What do? You ask yourself, is the Fed likely to keep on holding rates at those very low levels while continuing the large QE program? Or is that context about to change completely? Basically, what we're doing here is asking ourselves is if the fundamental sentiment that is driving the trend at that moment is likely going to continue being the dominant sentiment over the next couple of weeks, months, whatever it is the time horizon that we're looking at. And if the answer is yes, then we have a trade to take in the macro direction, which in this example is dollar shorts. If the answer is no, then we know the sentiment is probably near its limits, and we can either wait for the right technical confirmation to fade the trend, or just literally trade pullbacks along the way. Now that's fundamental analysis in the simplest but most actionable, effective, practical, and realistic form. Now, this is gonna sound cool in theory, but the practice is probably different, isn't it? Well, yes, of course, it's different, but this hypothetical example wasn't that hypothetical after all. Now, if you have been trading for a while, you will remember that in mid to late 2020, that exact story was the dominant story across the markets. The Fed was committed to keeping interest rates very low and continuing the large QE program. That was the story, that was the trend, and the trend was bearish for the dollar. So, if you knew that context, you would have made your trading a lot easier because you would have just shorted the dollar along the way. And of course, there were pullbacks in the trend, of course. But you would have picked the better trades just by shorting the dollar in that context. The point here is that when the market is trending, there is always a fundamental reason for such trend to exist. And that's where fundamental analysis comes into play. Because you immediately gain an advantage when you know the logic and rationale behind the narrative driving the trend. Simply because you can then know fundamentally if that specific context should continue or not. Is the Fed likely to keep rates low? Is inflation in the UK likely to stay high compared to Europe? It's about understanding that story. And that is the whole point of fundamental analysis. That's the use of fundamental analysis. If this makes sense, you've done a great job. Because you've done a very important step in understanding how to really use fundamentals. Not just how to theorize things, but how to use fundamentals practically to improve your trading. Because it's not some super advanced and complex kind of analysis. No, it's about being aware of what is the fundamental story driving a specific trend, and then analyzing whether that story should continue or not. That's fundamental analysis in a way that is actionable and realistically useful in your trading. So get this part straight about fundamentals, and I'm telling you, your whole understanding of the subject will be on a completely different level, and I mean a level that will be actionable and useful in your trading so that you can actually apply it to be more consistent.